Hey, it's Jim, and this is level 3 of the CFA program, the private markets pathway, and the learning module on general partner and investor perspectives and the investment process. And here are the learning outcome statements. As you casually glance through these, what I want you to do is go back to the level 1 LOSs on a mutual fund manager. And I think some of the good questions that will show up in this section might be the differences between the two. So if I go through these quickly here, what does a mutual fund manager do? They just accept our money, right? And they invest it. So they have roles and responsibilities. But here inside of the private market, that role that the mutual fund manager plays now goes to the general partner. And the rest of us who invest in this fund, this private fund, we become the limited partners. Back in the mutual fund days, we're just regular old shareholders or investors. What that means then is that the general partner has specific roles and responsibilities that are probably a little bit more advanced and go down different paths than the regular old mutual fund manager. Notice in the second one, we're going to have to calculate. Of course, mutual fund managers want to get compensated, but they get compensated through things like, management fees and expense ratios. For private investments, we're going to have to do management fees, but we bring in the specter of carried interest, which carries a lot of political weight to it. So we have a problem in here, and I'll show you how to calculate that carried interest. Now, what the mutual fund manager does is go out and find stocks and bonds to invest in. But now, in the private market, we're actually going out and investing in unique and private, they tend to be small, but they don't have to be, firms. So that's why we call them targets. And those targets are going to be the source of value creation. And so that third LOS really is nothing more than a capital budgeting problem, right? The private fund manager is going to find projects that have positive net present values. Of course, everybody out there in the financial services industry works hard, but you guys know, and you've listened to me before, due diligence, this is super important. Now, the exit routes in regular old mutual fund stuff, that just involves picking up the phone, calling the manager and say, hey, I want my money back. And they send it to you, fairly quickly. But here, since we have all these extra responsibilities and roles, we need to figure out how to get out of owning a business. Now, back in the old days when I was going through the program, this is, over 2 decades ago now, there were 18 study sessions, and these chapters, they seem like they went on and on forever. But several years ago, as I'm guessing you guys know, the Institute chopped these into smaller learning modules. So what I think is really cool, what the Institute does now is they tend to, not every learning module, but